When you hear the name Philips, what's the first thing that comes to your mind? Probably a trimmer, an electric toothbrush, or maybe a kitchen appliances. But here's something most people don't know. For Philips, the real business is not inside your home, it's actually inside the hospitals. Yes, MRI machines, CT scanners, ultrasound systems, patient monitors, these are some of the products that make Philips one of the world's leading healthcare technology companies. And this comes at the perfect time because India's medical devices industry is growing rapidly. The market is expected to grow from over $15 billion in 2025 to over $50 billion by 2030, making India one of the fastest growing medical devices markets in the world. So, can Philips India benefit from this massive opportunity? Let's understand the company. Philips India has been operating in India since 1930 and is a subsidiary of Royal Philips, the Netherlands based healthcare technology giant. The company has three major businesses. The first one is health systems, where it sells MRI machines, CT scanners, ultrasound systems, patient monitors, and other medical equipments to hospitals. Now, the second one is innovation services, and its Bengaluru Innovation Campus. Thousands of engineers develop healthcare software, AI solutions, and digital health technologies that are used by Philips across the world. Third one, well, is personal health, where it sells products like trimmers, electric toothbrush, mother and baby products, and other consumer appliances. Now, what makes the business interesting is that Philips doesn't earn money only when it sells a machine. So, after a hospital buys, say, an MRI machine or maybe a CT scanner, it also pays for the installation, software upgrades, annual maintenance, and servicing charges. This creates a recurring revenue, making the business more stable than the companies that depend only on the product sales. The company also manufactures healthcare equipment at its Pune facility under the Make in India initiative. While India continues to be one of Philips' largest global research and development hubs, now let's look at the financials. So, Philips India is completely debt free, meaning it doesn't rely on borrowings to fund its businesses. This gives the company financial stability and enough flexibility to invest in future expansion whenever required. The company's growth has also remained steady. Between FY 2022 and FY 2025, revenue delivered a CAGR of around 6%, while PAT grew at a CAGR of around 5%. What's even more impressive is the improvement in profitability. EBITDA margin expanded over from 7.2% to 10%, while EBITDA jumped nearly 34% and PAT grew over 20% in FY25 alone, indicating strong operating performance. The company's capital efficiency has also improved. Return on equity has increased consistently over the last 3 years, while return on capital employed has remained above 22%, showing that Philips is generating better returns from the capital invested in the business. One area that still needs attention is inventory management. The inventory turnover ratio declined from 4.8 times in FY 2022 to 3.36 times in FY 25. Although it improved slightly in FY 25, it still suggests products are moving slower than they were a few years ago. Of course, there are risks too. Many advanced medical devices are still imported, making the business vulnerable to currency fluctuations and supply chain disruptions. Competition is intense with both global giants and Indian manufacturers competing for hospital contracts. Government tenders also focus heavily on pricing, which can put pressure on margins. Another important point is that over 96% of Philips India is owned by Royal Philips, leaving less than 4% with the public shareholders. This results in a very small public float and lower liquidity in the stock. Overall, Philips India combines a trusted global brand, a debt-free balance sheet, improving profitability, recurring service income, and strong research capabilities with India's healthcare infrastructure expanding rapidly. The company is well positioned to benefit from the long-term growth of the medical devices industry. Now, the real question is whether Philips India can convert this industry opportunity into consistent earnings growth over the next decade. Would you consider Philips India a long term investment? Let us know in the comments and do not forget to subscribe for more such company analysis videos. Keep watching ShareScat.